Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Meta finalizes a $14 billion investment in Scale AI and has the CEO amping up its AGI efforts. Plus, Adobe sales outlook, it tops estimates, but it's not enough to quell investors' concern that it's losing the AI race. And reports of stablecoin plans by the world's biggest retailers puts pressure on Visa and MasterCard. We discuss with the CEO of crypto firm Circle. But first, we check in on what the markets are doing today. There is a clear geopolitical risk that is front and center for investors. We think about what the Israeli attacks on Iran means for the search for safety. And we do see indeed the Nasdaq 100 off by 0.8%. There are idiosyncratic news within the benchmark, but Bitcoin not your savior of choice at the moment, not the area to go for safety. We're currently off by 0.9% on Bitcoin. Move on and have a look at some of the individual movers. Look, we've got to get into, in particular, some tech news that is all about Meta. Another acqui-hire, but this one costing more than $14 billion. We're off by 0.5%, but generally the market likes the move, the spending of Meta on the future of AGI. Let's get to it all with Kurt Wagner, who's been breaking this story step by step. You brought us the idea that, of course, Alexandr Wang was going to be part of this crucial team that Mark Zuckerberg is forming. This does seem to be yet another example of an acqui-hire by a big tech company.
It does, because as you mentioned, Caroline, there is that $14.3 billion investment, but Alexandr Wang is joining Meta. So are some of the other employees from Scale AI. So while Meta is obviously, now a 49% stakeholder in Scale, it's taking the CEO over to Meta. So a lot of people are sort of viewing this as a very expensive acqui-hire. Obviously, there's still Scale is still going to be operating independently. It's going to have an interim CEO, but given the talent that is moving from Scale to Meta, this is a very expensive talent grab, and this is something that I think we've seen from Mark Zuckerberg before, and something that he is clearly very, very focused on AI right now.
We've seen it from other key tech companies, this acqui-hire idea, the fact that maybe you skirt any regulatory oversight, particularly when perhaps Meta's in front line when it comes to the FTC investigation. You're thinking Microsoft with Inflection, you're thinking Amazon with Adept, you're thinking of Google with Character AI, Kurt. What does this show about the anxiety that Mark Zuckerberg has right now?
Well, part of the momentum here is because he felt like they are behind, right? We had a story a couple days ago about him building this new superintelligence AI team, and that was really motivated by the fact that their Llama 4 launch back in April was underwhelming, and that he felt that Meta was not keeping pace in the way that they should. So I think there's a real paranoia there. This is, a sort of a classic Mark Zuckerberg move for him to just get incredibly in the weeds on something that he feels his business is sort of lacking. But I also think it just speaks to the limit in terms of how much talent there is out there in the AI space, like really good talent. Like the fact that they're willing to spend this much on these folks sort of says that it's a very competitive landscape when it comes to hiring people. And I think we've seen that across the board, and it's only going to get tighter now that everyone's sort of picked their various startup that they're backing here.
It's interesting, we've already heard from OpenAI saying they're going to stick working with Scale AI, which is now going to be helmed by Jason Droge. He was previously the strategy officer, now he becomes the CEO. But talk to us about what Alexandr Wang brings in particular. He's got a very good way of networking, particularly on Capitol Hill.
Yeah, so, I've been told by several folks over the last week that Mark Zuckerberg just thinks that Alexandr Wang is the best guy. He thinks he is so talented. He's super bullish on this guy. I believe he's just 28 years old. And you're right, Caroline. He brings a great network. Everyone I've talked to has said this guy knows everybody in the AI space. He also, as you point out, knows folks on Capitol Hill. This is a time when I think Meta and Mark Zuckerberg in particular are trying to build relationships with the Trump administration. We've seen them sort of announce plans to partner with Anduril on potential military tech. So it's a bit of a new, direction for this company trying to get into perhaps government contracts. And I think Alexandr Wang brings some of that connectivity to Meta and Mark Zuckerberg. And so in addition to the AI experience, this is also someone who might be able to help him out relationship-wise.
Well, so far investors have trusted the steerage of Mark Zuckerberg. Just a significant outperformance, up 18% so far on the year. Bloomberg's Kurt Wagner, thanks so much on all things Meta. Let's broaden it out. Michael Reynolds is with us, Vice President in Investment Strategy at Glenmead, manages $45.6 billion in assets. And just focus for a moment on the AI trade and this rush to spend by the hyperscalers, of which Meta is now one. What do you make of this acqui-hire?
Thanks for having me. So we think without a doubt AI is transformational, and anyone who disagrees with that just probably hasn't been using it properly. But I think we're cautioning investors on our end to think through the connection between a transformational technology and what it actually leads to in terms of investment opportunities. History is littered with examples of great technology that just was not a good investment. Gutenberg invented the printing press, but he died in poverty. Railroad bonds were notoriously poor investments. We're just not seeing a lot of pure plays in AI right now in the public markets, but perhaps if investors are turning to the private markets, that may be a little bit more plentiful with opportunities for AI, as there's certainly going to be winners and losers in this space, but we're certainly in early stages.
Okay, so how are investors getting access to the private markets on this particular area? Are they looking more to access, well, VC liquidity in some way?
Yeah, we think it's a combination of trying to get that direct exposure with those that are actually building the software and delivering the AI tools that the end user is actually using, but also some of sort of the ancillary providers that can help on the margins, whether it's delivering the hardware on the tech, or it's maybe the data centers that are delivering the energy that can help facilitate all of this. The best solution is probably a combination of the two, as you don't want to sort of put all your bets on one side of a trade here and end up missing some of the bigger beneficiaries that were perhaps a little unintuitive as you were thinking through it in real time.
Mike, so sticking with public markets, are you seeing people trying to bet on whether it be the energy stack, whether it be the AI hardware or the software stack from an equity perspective, or are they going into the bond market too?
A little bit of both. I think the equity markets are probably a little sexier from that perspective. Data centers have been really great performers over the last couple of years, in expectation that there's just going to be a big energy sink to be able to use these models at scale. We've seen a little bit of pushback on that, given some of the opportunities we've seen coming out of DeepSeek, where they were able to perhaps do things a little more efficiently and pull back on some of those expectations. But it's probably a little bit of both on both sides of the capital markets, stocks and bonds, where there's going to be opportunities here driven by technological innovation.
I like that you bring that up, Mike, because it actually was quite recently that we were all panicking around actually whether you needed the scale of investment, you needed the scale of infrastructure because of DeepSeek. But I feel that's almost been put to bed. You look at Oracle's numbers this week, you think about the anxiety around supply, really, that's what the nature of the story has been. People can't build it fast enough. Is that where we're back to in terms of the market psyche?
To some extent, I think over the last year or so, perhaps pre-DeepSeek, there was a lot of concerns that just wasn't enough energy to go around, that some of these data centers were going to have to build out alternative energy sources, maybe flirting with nuclear. But it's really, I think it falls into the historical precedents where when you have a breakthrough technology, it often seems like there's a lot of startup costs to really break through and get the technology working at scale. But innovation's a beautiful thing, and finding ways to do things more effectively and efficiently always just seems to occur. I think that's happening in real time this year, and we could continue to expect that to unfold over the years ahead. Just finding better ways to build it and building a better mousetrap.
Okay, what about the mousetrap? Is it all about the United States? Are you looking at other opportunities? Are your investors, the people that you're speaking to, wanting to get out into Europe and Asia?
Yeah, there was certainly this theory that U.S. exceptionalism in AI was, an uncrackable theme, and I think there are some sort of fissures into that theme this year, where again you had the DeepSeek news out of China. You have several other countries that are really doing a lot to incentivize domestic development of these types of technologies. It's happening in the UAE and European Union, many parts of Asia. They're trying to build out this technology. So it's, is the U.S. going to have a monopoly on this this technology for the foreseeable future remains unseen. But there's quite a few players that are emerging in this market that could end up sharing market share on this.
G42 making inroads into Europe and the UK. We'll discuss that later in the show. You've had Jensen Huang over there in the United Kingdom and Europe making deals. Michael, I'll end it here, therefore, because we've gone global. And today is a global day in nature, how people are feeling about potential increased tensions in the Middle East, maybe even war. How are your investors responding to that at this moment?
So we're cautioning our investors not to react too quickly to unfolding geopolitical conflict here. So far, I think we're following a pretty standard geopolitical blueprint where markets are reacting to the uncertainty that just didn't exist a few hours ago. But in general, markets tend to see through this type of thing, especially for those countries that are not directly involved. This time around, I think inflation is going to be really important to watch here. If energy infrastructure in the region starts to come in the crosshairs, figuratively or perhaps even literally speaking, that could have potential inflationary impacts for energy, which is not just an input cost for a direct input cost for consumers, but also for a lot of the goods they consume also consume energy. So we're looking at that pretty closely, as well as the shipping lanes throughout that region, which can be pretty important for global trade. Those are going to be really important to watch over the weekend.
Michael Reynolds, we hope you get some rest over the weekend. Vice President of Investment Strategy at Glenmead. We appreciate your time. Now let's discuss that key story. Israel launching multiple strikes across Iran, targeting nuclear facilities, killing top military officials. President Trump urging Iran to accept a nuclear deal in an effort to avoid further attacks. Iran vowing to continue its nuclear program despite the Israeli strikes. For more, we turn to Bloomberg's Jomana Besetchi, who joins us now, actually based in London just for this week. And Jomana, you're usually in the Middle East, and it's interesting we're getting a US official telling Bloomberg News that indeed we are still seeing talks likely to be conducted between the United States and Iran.
Yes, perhaps there is a potential for de-escalation here, especially as those sixth round of talks between U.S. and Iran were slated to take place in Oman this weekend. Given the events of the last 24 hours, the eventual possibility of those happening was thrown into doubt. But of course, what we have seen, just as a recap, is the most significant attack on Iran going back to the 80s. What Israel did in the last 24 hours supersedes all of the events that happened last year, both back in April and in October, and really constitutes a major blow to Iran, not just in terms of the fact that Israel went after specific nuclear facilities. And even though no radiation has actually been recorded from those nuclear facilities, what they did succeed at doing is at taking out some senior IRGC, so these are Revolutionary Guard commanders, the chief of staff of the armed forces. Some of these people are key masterminds behind the attacks that had been conducted on Israel in the last year, but also on the Aramco facilities in Saudi Arabia back in 2019. So some of the key players have been taken out with these strikes. Now, where we go from here, Iran has vowed a harsh retaliation. Already this morning, they fired over 100 drones directed towards Israel. Those are mainly intercepted. But the question from here onwards is how many more ballistic missiles they're looking to send towards Israel, whether or not this will encapsulate other proxies in the region as well, whether the likes of Hezbollah, Houthis, and Hamas may get involved in the retaliation. And then also whether or not the international community look to de-escalate from this point onwards. And to your point, U.S. plays a significant role here because of the possibility of a furthering of those nuclear discussions. And let's see whether Iran actually does come to the table in good faith.
Jomana Besetchi, we really appreciate your time today. Thank you. Now coming up, we go back to tech. Apple sets a new target for a revamped Siri. More on that next. This is Bloomberg Tech. Apple said to be targeting a new internal date of spring 2026 for its revamped Siri upgrade after multiple delays. Now that's according to sources. Let's get to our own Mark Gurman for more. It was but this week that WWDC left us hanging on Siri, and you bring us some clarity.
That's exactly right. So they did not talk about Siri features pretty much at all at WWDC, other than to say they're still delayed and they'll be arriving in the coming year. So I looked into it, and the new launch timeframe is likely going to be as part of what will be known as iOS 26.4, and that It's currently scheduled for the springtime next year, so around March, April. And this will deliver the delayed Siri features. These are the features key to an AI overhaul for the voice assistant that were announced back in June of 2024. So the three main features are the ability to tap into your personal data to fulfill Siri queries. So if I asked for a question such as, what was the video I sent Caroline last week? It would be able to pull up that video or a podcast or a song. If I wanted to get analysis of something on my screen using Siri, it could do that as well. And it has precise control of applications. So for instance, I could say, pull up this photo of Caroline and edit it and send it to her, as well as a few other people in our group chat, right?
Yeah.
Those are impressive and big features, all delayed, now coming about 9 months from now.
I'm waiting for that photo, Mark. Put it on our group chat. But Mark, I'm also just, remind us what the problem has been here. Why has it been so difficult to integrate with Siri?
Apple has been facing some serious engineering and management problems, but just to break it down and not to get too technical, essentially Apple had to split Siri into two brains, right? The first brain, the more basic one, has to do with features like setting alarms, phone calls, all the legacy stuff. Then they built a second brain more based on large language models at the core of modern AI for those more advanced features I talked about. Right? But making one Siri that has two brains combined to do two different set of actions had compatibility problems in real world use. And I'm told it didn't work properly up to a third of the time, which is a lot based on how much usage these things are going to get. And so what Apple is doing now is rebuilding the underlying Siri architecture to have one brain based on that newer generation technology to handle everything. And that would eliminate the compatibility issues, but obviously is going to take more time to put together.
Brilliant storytelling. Mark Gurman, thank you so much with the breaking news as well. Now let's turn our attention to Adobe now. Shares under pressure after the company actually gave a sales outlook that was pretty good, but it failed to calm investors skeptical about its ability to really compete with the AI-focused startups. Bloomberg's Brody Ford joins us now. And look, shares are off by 5%, worst day since March 2025, even though they beat and they raised.
Right. I mean, so Adobe is this kind of poster child of a company which was the kind of leader of their industry for 20 years. Nobody could touch them. And the question is, okay, AI is coming. A lot of these apps are much more lightweight, cheaper, easier to use. Does Adobe stay relevant? That's the big question, and investors are not convinced. I mean, I think they're down 10% over the last year, Adobe's stock, and down further today, and it's all because of those AI disruption anxieties.
You're thinking Midjourney, for example. We're thinking even Sora making inroads when it comes to making the video side of the equation. But Firefly has been getting some use. What was it, like 2.4 billion contents made over the course of its being used out there in the wild?
It's been getting used, but when I was growing up, if you wanted to be like a cool creative person, you had to go find a copy of Photoshop somewhere or Adobe Premiere's video editing. It's not that way anymore. If you talk to people who are young, who are really kind of making cutting edge art, they're using, like these Midjourneys, Google's VO. I mean, when it comes to the enterprise level where you have a CIO who's worried about cybersecurity, they're still buying Adobe, but the question is, that next generation, where is the mind share going?
What was also interesting is they tried to win the IP battle. And try and say, look, we've got you covered. You don't need to be worried. We'll even pay out if we find that any of the images you're creating are based on some other IP. But people aren't worried about that so much anymore?
It's an interesting question. I mean, we saw Disney suing Midjourney a couple of days ago. I'm sure the CIO of our company or others is not going to go and pay for a company getting sued by Disney. But at this current moment, it's still unsettled. It appears that the anxieties around, hey, scraping data to build models, is that going to be okay? It seems like a lot of buyers at this point aren't swayed against it.
They've got more convincing to do. Bloomberg's Brody Ford, brilliant as always. Thank you. AMD CEO Lisa Su said her company's latest AI processors can challenge NVIDIA chips in a market she now expects to soar past $500 billion in the next 3 years. Now, this is as the company aims to play catch-up with NVIDIA in AI accelerators with its new products. Let's talk about them. Bloomberg Intelligence analyst Kunjan Sabani is here with us. You were at the event. You're assessing what's been discussed. The MI350, will it be fast enough to start winning more market share?
Yeah, I mean, if you look at their event and announcement in isolation, we think there were many positives. One, the customer adoption is broadening. Some of the new names like XAI, OpenAI, Oracle, the deal with Oracle, which we think will be the largest 355 deal so far yet and will show results in the second half. These were really surprisingly positive. Remember, these have been traditionally NVIDIA only houses. So them getting to these customers is a pretty big deal. They showed continued progress on the hardware with the announcement of the roadmap with the 400 Helios server rack, and more important, the software, which they have been lagging until as of last year. So overall, a lot of impressive progress on all aspects, but the challenge is the competition also continues to speed ahead, and they have had a head start.
They have, and boy, does everyone just relentlessly compare them to Jensen's powerhouse. You say on your note that really that MI400 ramp up in 2026 is going to be the key inflection point for potential share gain. In a way, though, do they need it, Kunjan? Because in many ways, the issue for NVIDIA is a supply side issue. They can't make them fast enough. So is there still so much market for Lisa Su to take?
There is, and why that's an inflection point is when you think about the current competition or the playground, right? It is all about server level rack solution, not about chips anymore. AMD is still not there yet. So the Helios rack will be their first iteration using the ZT acquisition talent that they acquired and expertise, where they can really compete head to head with NVIDIA, assuming NVIDIA doesn't move forward another year from there. But that is what they really need. What they're really missing is a big cluster level server rack GPU solution.
What's interesting is, are they all still fighting for the training side of the equation? We've all just been dominated about the inference, and there are some really powerful startups coming into that space trying to take market share too.
I think they're leading by competing in inference because that is where they have the edge given their higher, or I would say apples to apples, higher memory bandwidth and efficiency there and a lower TCO. So they're getting into the customer doors through inference, and once they have proven and starting to gain a little bit more share, then they're showing up like, hey, you can still try us for training, and that's how they're trying to increase a little bit of a share in training. We still like the inference play. Remember, going forward, inference we expect to grow faster than training. Yes, training will be a big chunk still, but there will be a lot more broader customer base for inference.
Bloomberg Intelligence Analyst Kunjan Stabani, so great to get your analysis. Thank you. Welcome back to Bloomberg Tech. I'm Caroline Hyde in New York. Let's get a quick check on these markets. Now, we are consumed by geopolitics today. Anxiety around the Middle East after Israel's attack on Iran. We see the Nasdaq 100 off by 0.6% as we see that risk aversion play in, but not for all names. Oracle up 5%. It is just managing to ramp up higher, a new record high after they posted earnings earlier in the week, saying that they are going to be getting 70% gain in cloud infrastructure sales in this fiscal year. Adobe is down on its earnings. We discussed it with Brody Ford, off by 5%, not enough to quell anxiety that it won't be an AI winner. Move on, have a look at what's happening in broader assets, though. I want to shine a light on what's happening in the world of crypto, because Bitcoin, look, isn't actually playing out as a haven today so much. It's coming off of its lows. Look, we're still at 105,000, but it is off by 0.3% as we sell risk. But let's just talk more broadly about the movement within crypto and stablecoins in particular. This comes as the Senate nears the passage of the Genius Act, which would regulate, integrate stablecoins more into mainstream finance. I want to shine a light on what's happening with these names. Visa and MasterCard currently off by 5%, 4%, because reports coming out of the Wall Street Journal that, look, big players, Amazon, Walmart, are studying their own stablecoins. Does this cut out the middlemen, the card providers thus far? And of course, we're going to speak to one beneficiary of all of this legislation, all of the move towards stablecoins and digital payments. It's Circle. Circle CEO Jeremy Allaire joins me now on set. This report that potentially we see Amazon, Walmart already really galvanizing themselves to have their own stablecoins. How quickly could that upend Visa and MasterCard?
Well, look, I think if you're a major technology company, or you're a major commerce firm, or you're a major financial institution, when you get legal certainty that stablecoin money is a new form of electronic money that is available to the global financial system, you're gonna pay attention. And obviously, you're going to look at the technology, the progress of the technology as well. And I think the conclusion that a lot of major firms are reaching is that this is the new money layer of the internet, and it provides tremendous technology to innovate beyond what we've been able to innovate with money before. And it offers tremendous benefits ultimately to these firms' bottom lines. And so it's a technology that's ready. And it's a technology with the Genius Act, which you referred to, I think, which gets the legal certainty to really utilize this at scale. And so from my perspective, first of all, it's not surprising at all. And I think it's a tremendous opportunity as the world connects to this new form of currency on the internet.
Is it not surprising at all because they're coming to you to help build the infrastructure layer? How much would USDC, or indeed what Circle does, be what Amazon and Walmart eventually adopt?
Well, we see tremendous opportunities to collaborate with major technology firms, major payments companies, major financial institutions, and we already do. We work with some of the biggest household names. I mean, even just yesterday, we saw Shopify announce that they're making USDC payments a default option automatically. Wow. For every merchant on their platform in the US and then in Europe. That's like 1 million merchants.
So like a PayPal button and
pay
then
with USDC.
And then a USDC button.
It will be there by default.
Yeah.
And in fact, not only that, they'll be offering merchants 0.5% cash back to the merchant. So they're going to actually compensate the merchant, which is incredible. And so I think you're seeing platforms like this adopting USDC. And so, as the operator of the world's largest regulated stablecoin network in the world, we want to, and we're really a market neutral infrastructure. We don't compete for consumers or merchants or businesses. We want to work with everybody to take advantage of this breakthrough technology innovation.
The breakthrough comes with the regulatory support, as you say. Genius Act, when do you expect it to come into play?
Well, yesterday, the Genius Act passed a critical cloture vote with a supermajority, bipartisan, and so that sets it on a glide path to pass the Senate on Tuesday of next week.
We actually previously did hear from Tim Scott. Of course, he's been leading the charge in many ways on crypto more broadly, but he's been speaking to Bloomberg about some of the opportunities around stablecoin and leading the charge here in the United States as, of course, our key representative. Just take a listen.
With the bipartisan Genius Act, we can do more than just pass a bill. We can deliver results for the American people. We can bring clarity for a sector that's been clouded by uncertainty, and we can make it known. The United States will lead, not follow, in the digital asset revolution.
Chairman of the Senate Banking Committee, an important voice. But what's interesting with Tim Scott is now he's also pushing us towards where we go with broader crypto adoption. Yes, we get the Genius Act, but then what of the Clarity Act, as it's called? How much further would that take your industry?
Well, look, there's this incredible innovation of blockchains. There's this incredible innovation of digital assets, digital tokens, and we need legal clarity on what these are, how you can offer them, how they can be used, the platforms where they need to be registered or regulated, and where there's just very clear rules for issuers. So I think the Clarity Act is essential. I think it is a very strong piece of legislation. I know there's more work to do on that ultimately in the Senate, but I think the combination of both the Genius Act and the Clarity Act ultimately creates an incredible environment for a rules-based system in the United States, a competitive environment, and I believe does accomplish the objective of making the United States sort of the capital of this new form of technology innovation. It's a great opportunity for American companies as well.
Briefly, it's been good timing to go public. Your shares have absolutely soared since they first started trading last week. How does it feel?
I mean, look, we're very excited to be a public company. It's critical from our perspective to just enhance the trust, transparency, compliance, good governance that we're known for. And I think in particular at this moment, when we're getting this legal clarity around the world on stablecoin money, and in particular, as you said, these major companies are looking at this. We think that being a public company will serve us well in working with the leading institutions of the world. And so from that perspective, we're really pleased and excited to build tremendous partnerships around the world.
Oh, and you sync some of those partnerships. Do come back on to talk all about it. Circle CEO Jeremy Allaire, we appreciate it. Coming up, Felicis raises $900 million in its 10th round. This is a fund, of course, and Felicis managing partner Sandeep Pichu is going to be joining us next. This is Bloomberg Tech. is time now for Talking Tech. First up, Chinese authorities have released draft guidelines on the transmission of car data from overseas vehicles. Look, it's a move that could benefit Tesla and its autonomous driving features. It marks the first time Beijing has really clarified its stance on data generated and exported from within China. Plus, Abu Dhabi's G42, well, it's planning to launch a European unit. G42 Europe and UK, well, it's set to deploy AI solutions for the private sector, partnering with governments too. Now, the announcement comes as Nvidia CEO Alexandr Wang forecast a 10-fold increase in Europe's AI computing capacity over the next 2 years. And GameStop, well, it says the company's future is in trading cards, saying the likes of Pokemon sports cards align with the company's heritage, maybe not gaming. Look, GameStop's collectibles business made up 29% of revenue in the first quarter of the company, planning to add 280 more stores that will offer trading card evaluation services. Right, it's time for today's VC Spotlight now. And Felices has announced a $900 million 10th fund, the fund's largest ever to date. Let's bring in Sandeep Pichai, is Felice's managing partner, joining us now. And Sandeep, just tell us who the LPs are, what they're excited about you allocating towards.
Hi, Caroline. It's wonderful to be here. It's a very exciting week for us. We've raised $900 million, our largest fund yet, from mostly U.S. institutions that we're super proud to take money from. And these are hospital systems, museums, university endowments that are all doing like great things in the world. And we're proud to be in business with them, and we're proud to like multiply their money and, have it, go back to some great causes.
I'm just really interested, Sandeep, more broadly in where you therefore put the money. Because at the moment, it sounds as though you're going to be in generative AI more full throttle. It's going to be the infrastructure layer, but that feels like a very busy, very crowded space. Who are the companies you're depending on?
Yeah, I mean, just to give, take a step back here, Felices was actually born in 2010s. Our very first institutional fund was just at the beginning of the cloud and the mobile tech supercycle. And, we've been very fortunate that we found some like amazing businesses as part of that. Household names today like a Shopify, Adyen, a Canva, and a Notion. And so we're now at another exciting tech supercycle in AI, just in the first or second innings, if you will. And so there's a lot of excitement in the past 2 years. 2/3 of our investments have been AI native companies. Most of our investments are like usually first or second money in. So we're playing very, very much into the AI supercycle. Household names, hopefully like the Canvas of the world, 10 years from now that go public. Plus both the infrastructure stack as well as the application stack.
It's interesting. We had Menlo Ventures partner on yesterday, and Sean was telling us that in certain areas, the funding just seems extraordinary. The valuations, once again, almost feel akin to 2021. Is that what's happening right now? How are you getting in at a decent price point?
Yeah, look, I think valuations, continue to be market driven in many ways, and we're not the only ones excited about AI. But if you take a step back, the reason why everybody's excited about AI is that even like if you look at like the broad arc of tech history, what tech is really good at is providing us products and services that are previously expensive or like inaccessible, except to like a very few, and bringing it all the way down, democratizing that, to the masses, if you will. And, a great examples of these in the last tech cycle were companies like Canva that allowed anybody to design. Now over 200 million people use Canva to design. You have something like a Shopify. Anybody can become an entrepreneur, and millions have become entrepreneurs because of Shopify. An Uber gave us all a private driver. An Airbnb gave us all a vacation rental. And so, you take that forward and you think about like what AI can do for us. It's, every household. I mean, think about how many times we keep talking about, I wish I had like a private tutor for my kids. I wish I had, a therapist. Like, and they're so expensive. Every session is expensive. They're hard to find. Think about all of the labor that kind of goes into household services. Or if you move that to businesses, you have, things that are available to senior management, like an executive assistant or an executive coach that are not available to everybody else. And AI is expanding the surface of software so drastically. And if you think about this, Caroline, just 1 to 2% of world GDP currently spent on software. And AI is so radically restructuring the surface area of software. And you can be an AI pessimist or optimist, and those numbers in 10 years are going to be different for each one of us. But none of us are going to disagree that that number is going to move up drastically.
Sandeep, very briefly, like you have had some superb exits, and think of Shopify and Adyen, and you are in some of the hottest names when I think about Runway and indeed Canva. How much pressure have you seen from LPs being like, look, we need the liquidity now? How quickly do you think these doors can remain open, briefly?
I think, for the very, very best companies, think about a Canva, like their shares can trade every single day. They don't have to even raise any primary money. They've been so profitable for so long that in the secondary markets, you always have the ability to exit if you want. And we've selectively chosen that for our LPs and given them back like some distribution. And so we've done that, like on occasion. Many other funds have done that. So I'm not worried about that. I think bigger things to think about is that given this new AI tech cycle, if you assume that the software as a percentage of GDP doubles, let's say conservatively, that's hundreds of billions of dollars of new spend that is going to get allocated to new products and services that are AI. Our job is to basically go and find those outlier businesses for our LPs and find the next Shopify and Canva and Adyen, before they're obvious.
Sunday Pichu, thanks for bringing it. Felices on the new 10th fund. LGBTQ plus dating app Grindr, its popularity has grown globally, averaging 14.5 million monthly active users. Shares of the company are up 33% year to date. We spoke with the Grindr CEO, George Arison, about the role AI is playing in that growth and how they handle privacy in the age of AI.
At Grindr, privacy is by far the paramount thing because we have users in countries where it's illegal to be gay or in areas where, while it might be legal, you still can't really be yourself. And so protecting them is really, really crucial. We don't ask for a lot of information from users when they join the app. We don't require a photo. We don't try to be as minimal as we can in that regard, again, because privacy is so important to users. And from there, the other really critical thing for us is to be able to keep all the data on Grindr. So we work with Amazon's Bedrock service, which is a virtual private space that allows us to actually keep everything on our end. Our data does not kind of stay with anybody else, and our data does not train anybody else's models. And that's been really helpful, obviously. And the other thing we're now starting to do is actually take open source models and put them into our system and be able to train them to make them be a little more gay. And that's also quite interesting because that's kind of pushing us closer to the frontier of what's happening in AI, but no one else is doing anything like that, and we think we can provide some really useful insights for our users through that.
Grindr CEO George Arison there. Let's just talk about New York State as well. It has begun asking companies to disclose when artificial intelligence contributes to mass layoffs. It's a symbolic move as officials look to possibly regulating AI. The technology's impact on the workforce could have an uneven effect between men and women. Shubi Rao's with us. She is the founder and CEO of UpLevel. It's a AI platform designed to accelerate women in the workplace. Shubi is also an engineer, former tech executive yourself. Shubi, is there going to be an unequal impact of generative AI's use on the workforce, do you think?
Well, when you look at what is happening in the world of AI and where the applications, at least today, are, it's about automating jobs that are largely held by women. It just so happens that those jobs tend to be more administrative in nature and are perfect and ripe for automation. And so it'll be really interesting to see what the data shows, especially if this does become legislation in New York.
It is, yeah.
How it impacts women and how disproportionately that impact then creates further gender inequities.
How is your technology perhaps trying to play a counterforce here?
Yeah, if you take a step back and think about today how the models are being trained from a generative AI perspective, those large models, whether it's the OpenAI models or is Gemini or Cloud, have been trained largely from data of the internet. And when you look at what is the data on the internet, the large swaths of data, of course, are Wikipedia, Reddit, GitHub, popular pop gender data sets, which tend to be highly male dominant. Then you look at the other data sets, whether that's related to academic papers, publications around business, books and use cases, healthcare, where again, up until recently, women were not even included in those clinical data sets, Really, there's not a lot around caregiving, unpaid labor, right? So when you look at what that data set highly represents or overrepresents men than it does women. So that is the basis of the training data sets for majority of the models today. So the counterforce for up level, what we're trying to do at up level is create the world's largest gender data set so that this gender data set actually represents women, both contextually from an experience perspective, understands women's challenges around career, health, wealth, and more importantly, can be that counterforce whereby, if, in theory, someday if we could blend both those data sets, then we'll have that gender equality across the broader training sets.
Shubi, it's really interesting. We're hearing from the Grindr CEO saying they're training their large language models to be more gay. From the perspective of maybe you start to counteract the bias within the applications that come from the large language models, but what about just unsaid biases about women and actually adopting this technology? Are we being first movers? Are people being early adopters in the workforce, do you think, at the same level as men?
Yeah, this is a disturbing number that, I keep seeing where it feels like the gap was maybe 20 percentage points between men adopting, and I'm talking about generative AI, not just AI broadly, but just even generative AI tools versus women. Part of that has to do with, if you look at broader adoption of women in terms of big tech, yes, women might be on those platforms, but are not nearly as active in terms of posting, sharing comments, reacting than men are. And so and why is that? Because, when you look at a lot of these platforms, and there has been a mass exodus of women is because of the misogyny, the narcissism, the sexualization, etc. So there is this inherent issue that we have around trusting tech, and that's bleeding itself into also using these generative AI tools. So a big part of that is just, can I trust this? Or if I use this tool, then can I actually say this is my work? So there's that bigger issue. So there have been impediments to adoption for women.
In 30 seconds, Shubi, is it getting better?
No, it's not getting better. It's actually widening. So, or said differently, maybe women are still at the same rate of adoption and men are adopting it faster.
More work to do. More reason to see up-level going in there and building these connections with big companies. Shubi Rao, so good to have you, the up-level founder and CEO. We appreciate it. And that does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Tech.